Welcome back to Build Boldly. I'm your host, Pat Rodgers, and today we dive deeper into our top tips for 26. Last week, we dove into strategy and operations. If you missed the episode, the key takeaways revolved around a 360 review of your business and the achievements from last year, as well as establishing clear goals and milestones, and most importantly, gaining buy-in from your team. So why did we start with strategy and goal setting? Strategy and goal setting enable us to work backward to ensure we have the needs of the business clearly articulated and understood across every function and person. Our goals create the foundation for our success. We're now ready to work backwards from these goals to establish our budgets, areas of investments, and forecasts for the new year. And we started with our finance and accounting. We won't truly understand the gaps in our business or the areas we need to invest in, like hiring, software, and technology, partnerships, and so on. Finance and accounting are the language of business. Without them, we're flying blind. Whether you're planning on selling your business in the future, applying for financing to expand your operations, or even to simply turn a profit, we can't do any of this without accurate and timely finance and accounting principles. I can tell you firsthand from my own experience and through speaking with numerous founders and operators, this is the most challenging aspect of running a business. Not because it's overly complicated, but because it's boring. The behind-the-scenes boring elements always come last. We get behind and the backlog just continues to grow. Previously, I worked in the bookkeeping services industry, and through this experience, I had the opportunity to see the good, the bad, and the ugly when it comes to small business accounting. I know this is not the strong suit for the majority of owners and founders, which is why getting this down early is so critical to success. Making this a habit is one of the most important things you can do for your business. With that, let's dive into our top tips for finance and accounting. Coming in at number 1, it's time to level up your bookkeeping. To start, as you probably already know, bookkeeping is the basic function of tracking the ins and outs of your business, capturing every expense, managing every invoice, and ensuring you know exactly where your dollars are being spent and where they are coming from. Now, this is very much based on where you are in your journey. If you're currently in the wait till the end of the year and manage your business out of your checking account, yes, I've seen this hundreds of times, it's time to level up to a spreadsheet. At the most basic of levels, you have to track what comes in and what goes out, your income and your expenses. There are so many templates available for free online and YouTube videos for days. Take the first step and begin tracking everything. You'll be shocked at what you've missed along the way. If you're already there, it's time to get QuickBooks. QuickBooks is a very small expense with massive rewards. There are automations with credit cards, invoicing built in, and so many other features that streamline operations and bookkeeping. If you're on QuickBooks and things are going fairly well, it's time to look at outsourced bookkeeping help. Getting this off your plate is a critical step in your growth. Having an outside group reviewing and tracking your books also ensures you don't miss something along the way. If you're outsourcing today, let's dive in on automation. POS systems, also known as point of sale, Square, Shopify, and so many others automate the capture of revenue. Solutions like Ramp and Bill.com automate expense reconciliation and bill pay. The more streamlined your bookkeeping practices are, the stronger your business becomes. Okay, let's talk about number 2, budgets and pro formas. Very exciting stuff. As I mentioned earlier, we first established our goals. These goals now require investments or adjustments in our business. Anytime we are leveling up and increasing our targets, we have to identify where this new productivity is going to come from in order to achieve our objectives. This may require additional hires or software solutions to increase existing employee productivity. Depending on our industry, this may be acquiring more inventory, capital expenses like equipment and machinery, or new space to continue growing your business. The most important factor here is knowing where and when to invest in the business. This is where your pro forma comes into play. A pro forma is simply a what-if model of how you get to your goals. You'll input all of your assumptions around revenue, expenses, hiring, and any other elements that support you in achieving your goal. A simple example may be a goal of doubling your revenue. So the first question to ask is, can I double my revenue with the current team? Can they do more with their current workload and their current abilities? Or do we need to hire someone, buy new equipment, or potentially software that makes them more productive? This model shows you the blind spots and becomes a guide to achieving your ultimate goals. The next step is your budget. The budget provides guardrails to these goals. They define the outputs that determine if we are successful. Pro formas and budgets are also easily found online, and there are tons of YouTube videos available to quickly learn and build these models. I can't stress this enough. Hope is not a strategy. Your pro forma and budget become the map to success. Number 3, build banking relationships. The banking world has changed dramatically over the past 20 years. With the ability to do mobile deposits and tellers replacing bankers, we have lost that relationship aspect of banking. It is even harder when you're dealing with large institutions. When you're a small business, I highly recommend working with a small bank. Community banks are a key aspect of the banking industry and are even more invested in the communities that they serve. The first step is to create a business account. Begin depositing funds with them, and over time, these deposits and frequency of the deposits builds trust and confidence with your banker. Before I go any further, I want to make sure we are all very clear on one very, very important concept of banking and business. Please, 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 please do not commingle personal expenses with business expenses. I see too many businesses where their personal financials are so intertwined with their business that it becomes nearly impossible to unwind. This makes it so hard to sell your business in the future or gain financing for expansion. The first and most critical step is separating these and keeping them separate. Okay, off my soapbox. The real benefit of this separation is that the strength built from clean deposits combined with your relationship with your banker will open doors to financing you may never have achieved with a large institution. As an example, Rise is now a very large business, yet we still work directly with community banks on a regular basis. These are relationships that were built over many years, and we would not be where we are today without these relationships. Number 4, understand your cash flow and forecasting, or hire someone who does. You now have your budget and pro forma in place. A key aspect of your financials is your cash flow. If you're using QuickBooks Online, there's a very simple cash flow statement that can be generated. If we don't manage our cash flow, we can miss things like accounts receivable or the money we are still owed. We can also get out ahead of our skis and spend more than we're actually bringing in. The absolute worst thing you can do as a small business is miss payroll. Your people are the lifeblood of your business. Make sure you understand these principles and watch them closely to ensure you can operate at the speed and pace needed to achieve your goals. Forecasting plays directly into your pro forma. Looking ahead and understanding where you may end up and what it takes to get there will enable you to know when and where to invest in the business. Last, but certainly not least, and very timely as we head into this season, find a business tax accountant and meet with them quarterly. I'll be the first to tell you, taxes suck. No one likes them, no one wants them, but they're here to stay. The best thing you can do for your business is ensure you're paying exactly what you owe and nothing more. There is a very big difference between personal taxes and business taxes. Find an expert that knows everything there is to know about business taxation. Be as transparent as possible with them and build this relationship for the long term. A great business tax accountant can truly enhance your business and set you up for long-term success. Quarterly meetings ensure you aren't missing payments and that you aren't in a full-on panic mode when year-end comes and you have to find thousands of documents to hopefully maybe make a payment on time. Great bookkeeping also ensures you're prepared and can have clear and concise conversations with your tax accountant. Seriously, if you don't have one today, get out there and find one. All right, that was a lot. And I know that this has probably been the most boring episode of your life. However, this is the area where great businesses go to die. If you don't invest the time and resources into finance and accounting, your dream will die before you ever reach your potential. Lean into the suck, get it done, and make it a core function of your business. Doing this right will open endless doors, give you peace of mind, and allow you the time and space to achieve something incredible. Next week, we're diving in on a topic that is near and dear to my heart, sales and marketing. Get ready because if nothing else, I can promise it'll be much more exciting than finance and accounting. Stay tuned. Give us a like or share if you found this helpful. And as always, build boldly.